Hello students, we have been given lectures on this working capital management from concept to working capital, other formats. Now today we will be discussing the working capital estimated method, that is the total approach. That is, you have to calculate the working capital requirement, how much working capital required, you have to calculate for that. So this method is the, by name itself it is clear that this is the other way, that is the estimation method. You have to estimate that how long you are allowing the credit period to your debtors, how long your stocks will be blocked in your work in progress and raw material holding period, as well as the credit availed from the creditors. So that is the thing. So we will be discussing with the help of an example, that is B.ED Limited, manufacturers of product used in steel industry. The following information regarding the company is given for your consideration. The cost structure of B.ED Limited's product is as follows: raw material per unit 80, direct labor 20, overhead 80, including depreciation 20. That means 20 rupees depreciation and other overhead your 60. Total cost is your 180, profit equal to rupees 20, and selling price, that is your 200. Other informations they have given that expected level of production 9,000 units per annum. Raw materials are expected to remain in stores for an average 2 months. That means raw material holding period is 2 months. Very simple. Before issue to production. WIP, working for 50% complete as to conversion cost. Very carefully. Your conversion cost, that is 50% complete. That level, apart from your raw material, will approx to half months production. That means 15 days. Here this will be the block period, that is holding period. Finished goods remain in warehouse on an average 1 month. So 1 month finished goods you are to stay in your godown. Credit allowed by supplier 1 month, very simple. 2 months credit is normally allowed to debtors. You are allowing the credit to your debtors 2 months. A minimum cash balance you have to keep in your cash is 67,500. Cash sales are 75% less than credit sales. Here also very important thing that you have to keep in mind, the what is the cash and credit sales, that part has to calculate from here. Safety margin, whatever calculations of there, your unforeseen contingency, whatever working capital will come, you have to add with that 20%. The production pattern is assumed to be even during the year. So it is continuous process over a period of time. This thing, you are required to estimate the working capital requirement of B.ED Limited. See, before calculations of that, you have not been given certain clue points you have to understand from any problem. Here in absolute terms, you have not been given how much your raw material, how much direct labor, overhead, etc., etc. Instead of that, they have given the per unit price, and they have given the level of production 9,000 units. So these 2 points are your starting point for this problem. So then you have to calculate first the total your cost of productions and cost of sales value, how much, that you have to calculate first from there to starting point. So those will be your working notes, because unless until you do not know how much your raw material, how much your finished goods, how much your stock will be there, you will not be able to calculate the total problem. So projected income statement for how many units? 9,000 units. So for 9,000 units, your raw materials, how much it will be? Your 9,000 units multiplied by your 80 rupees per unit multiplied by 80 equal to your 7,20,000, your raw material, then your direct labor 9,000 units, direct labor per unit your 20 rupees multiplied by 20 equal to your 1,80,000, right? Then your overhead. You see that overhead purpose, what they have given in your this calculation stage, they have given that overhead in 80 rupees per unit. Out of that 20 rupees your depreciation. Then your cash item of overhead is your 60 rupees. So then overhead in cash, two part, you understand that? In cash 9,000 into rupees 60. 80 minus 20 equal to 60. So equal to your 5,40,000. And your depreciation will be your 9,000 into 20 equal to your these things 1,80,000. So this will be your cost of goods sold. Goods sold equal to will be your 16,20,000 plus you have to add profit. How much profit will come? They have given in your problem 20 rupees per unit. So profit will be your 9,000 into 20, 1,80,000. Then your sales value will be your 18 lakhs. So you see that from your required solutions of this problem, you understand that all these details will be available with you for your that calculations part. Your raw material you got it, direct labor you got it, you got your overhead you got it, you got your profit, you got your sales value. Now another important point you have to identify that cash sales are 75% less than credit sales. Directly they have not given out of the total figures of your sales how much it will be your cash, how much it will be your credit. So that part you have to calculate for this thing. So production pattern uniform, safety margin 20%. From here we can erase this purpose. These informations will be sufficient enough to solve your problem. So here what they are telling that thing, product your this proportion, this is 1 you are working, this is number 2 you are working, proportion between cash and credit sales. What they are telling that 75% less than the credit cash sales. So what will be there? We will be taking that how let the credit sales be X. You have to start from there. Cash sales are 75% less than credit sale. Then first of all you have to calculate the credit sale first. From there you have to make it the cash sales. So credit sales be X, then cash sales will be 25% into X minus 75%. Why? That is 75% less than credit sales. That means it will be 25% and X is the total sales. From there 75% you have to minus it. Whatever the balance will be there out of that 25%. So your cash and credit sales ratio will be cash sales is to credit sales ratio will be equal to x is to 25x. So that means both side x, if you cut it, 1 is to 25. So that means 4 is to 1. No, 25 is for 1. 4 is to 1 will be your this way. This will be the ratio between your this way. This between your cash sales is to credit sales ratio. We are giving this way. So now we will be calculating for our this main problem will be going for this thing. So here we have to start from this side only. So these portions you have taken into consideration, your per unit part is not required. Beta limited part is there still manufacturing. These informations will be sufficient for your rest of the problem solutions. So now let us start doing for your that statement of working capital requirement, right? Statement of working capital requirement. A, your current assets. Under that, your raw material holding period. See, you that raw materials are expected to remain in store for 2 months. So total raw materials only 2 months you have to take it. So that is your raw material. How much that place calculation? 7,20,000 into 2 by 12. So that will be your raw material. So raw material will be your 1,20,000, right? This is one. Then your WIP, work in progress. Under that work in progress, materials, you see that conversion cost your 50% complete. But material respected, nothing they are taking. So materials 100% we have to take. How much your holding period portions? Your 15 half months. That is 50% of a month. Then materials respect, it will be 7,20,000 into 0.5, that is half months as you are talking about, divided by 12 into 100%. Because see, conversion part, that is 50% they are talking. So what is the figure will be coming here? This will be figure will be coming here equal to your 30,000 materials, and your labor and overhead equal to your labor and overhead. So labor how much? Your that overhead part is your, how much your overhead? Labor and overhead your 7,20,000 plus 1,80,000. 7,20,000 plus 1,80,000 into 50% into 0.5 by 12. See, why we have taken here labor and overhead these things, total 50% conversion cost, you see WIP. So 50% we have taken out of the total in holding period is 15 days. So taking together, this figure is coming your that 18,750. 18,750. So this 30,000 figure will be taking it out, so that for your calculation showing purpose. So this will be your 30,000, right? So you got that material, you got it, your labor and overhead you got it, right? Now that your finished Finished goods very simple. They have straightway given the finished goods. No, finished goods remain in warehouse for 1 month. So finished goods holding period is 1 month. Say whatever the value will be there, that 1/12 we have to take. So finished goods, which figure we have to take it? That is your cost of goods sold. That portions you can see that your cost of goods sold is 16,20,000. So 16,20,000 into 1 month they are telling, no, on an 1 month, so 1/12. So this figure will be your 1,35,000, right? Now your another point is that credit finished goods remain in stores. 2 months credit period normally allowed to debtors. So debtors we are allowing 2 months credit period. So debtors will be equal to your 16,20,000 into 4/5 we have to take it. That ratio is 4:1. 4/5 into 2 months. 2/12 equal to this figure will be coming your 2,16,000. Right, debtors, and you have to hold minimum cash equal to with you. That figure they are telling, no, 67,500. So this total figure comes to your 5,87,250. Okay, so this will be the total of A. So again we are repeating your current assets, raw material this figure, your WIP under material component this, labor and overhead component is this, and finished goods is this amount, debtors we are allowing credit period, and cash we are holding. So this will be the gross working capital. Other way we can talk it these things. So now we have to see that this 5,87,000 will carry it forward since insufficient of this page. So 5,87,000 total A equal to 5,87,250. From there you have to B current liabilities. Current liabilities, that means your creditors, your credit allowed by supplier 1 month, very simple. So creditors, your this thing, raw material is your 7,20,000 into 1/12. So how much that figure comes? That will be coming your 60,000. So then working capital before provision equal to A minus B. Total your 5,87,250 and your current liability B equal to 60,000. Net figure is coming to 5,27,250. It is coming. So this way your working capital requirement is done. But in this problem they have given one safety margin. Suppose my calculation some mistake is there or some unforeseen contingency is there, we have to add it back with 20% safety margin. If it is required, it's all right. Otherwise, if you don't require, nothing will require. So 20% of that, it will be your 1,05,450. So 20% of 5,27,250. So this will be coming 1,05,000. Total requirement your 6,32,700. So total your working capital required is your 6,32,700. So this is the figure. So from this problem, what you understand that whenever in any exam, particularly in any professional exam, if you get this type of problem, first you have to pick up certain important things. As it was starting point is your cost per unit, so you have to calculate the individual item wise your material, labor, overhead and profit taking together your sales. Because cost of goods sold, this place we can end it our solution. But here one huge problem they have given, cash sales are 75% less than the credit sale. So for that reason your sales figure is required. So from that sales figure you have to make a ratio between credit sales and cash sales. So these two things are very important for your calculations part. Rest of the things straightway we can calculate it. So what we did it in our this problem cases, we did it for working capital, that theoretical part, what is the purpose, objectives, meaning. Then problem solution, operating cycle method, how much will be your this time involved in respective stages. We have given that problem solution. Now today we have discussed the estimation method, that is the in totality, that we require the total approach method. I think these two methods generally major problems will come. Rest of the cases your stock management, then EOQ concept, so many concepts are there. If need be, we will be taking some other video lectures on other day. So again, for regular way, we request you that please do subscribe to my channel, so that whatever the new videos will come, it will be available to you. We are ending the video today. Have a good day.